There are a couple of really interesting patterns playing out here for Bitcoin on the 4-hour time frame. And in today's video, I'm going to be sharing what I think is unfolding for Bitcoin and what could be setting ourselves up for next week. Let's roll the intro and get right down into it. Hi guys, welcome back to another Bitcoin video update. Today we are discussing Bitcoin's technical analysis on the 4-hour time frame. We are paired up with USDT and we are on Binance's chart here. So Binance is a data source. Now, as you can still see, if I just zoom out of this for a fraction, you can still see that we're inside the ascending wedge. The ascending wedge is a bearish pattern, but we do have hope that maybe we're able to break out of this bearish structure and actually start to maybe morph this pattern into a maybe more bullish one, right? Maybe less of a bearish pattern. So the bulls still have hope here, and rightfully so. Until we're kind of below the 50 EMA, the 50 SMA, and the 200 EMA, chances are that we have to kind of stay bullish on the market, right? If we were to lose these, then we have a little bit more ground to kind of see the bears taking control of the situation and for us to be a little bit more bearish on these smaller time frames. Okay, but for now, actually looking pretty good on Bitcoin here. So let's go ahead and zoom into what's been going on over the last little while here. Now, as you can kind of see, we have ourselves a bit of a problem. Okay, well, I say it's a problem. It's not really a problem, but here you can see, I'm going to draw this in. We have a little kind of triangle pattern, this triangular wedge just forming in right here. Now this, some people might say, is a bull flag, and it can look at it that way, but I wouldn't expect it to kind of look like this as a bull flag. A bull flag to me would be more like a parallel channel. Let me actually show you what that looks like by coming in here, grabbing hold of a parallel channel. Of course, this is just my kind of take on it. It doesn't have to, but it would be neater if we actually saw lower highs and lower lows in this area here. And what happens with a bull flag is you have the volume coming in, basically taking price upwards. A volume drops down, and usually you have lower lows and lower highs. Okay, and basically you see this breakout to the upside. Now, if I go ahead and put the volume on here, you can see volume increased during this run to the upside, and volume is decreasing. Let me put the trend line on there, decreasing here as we have this flag situation, right? So this is, in my opinion, the formation of a bull flag. Okay, and what do I mean by that? Well, I mean that what we've got going on, okay, at the moment looks like a triangular wedge, which can be a bull flag, but it's not ideal, at least in my opinion, to have it this way. But we are still looking at this as a kind of breakout situation, right? And why is this? Well, because the bull flag itself is a continuation pattern, right? We have the rally upwards, the sideways trading, or the lower lows and the lower highs trading, which is known as a continuation pattern, and then a breakout to the upside. Okay, so here we've kind of got the same situation unfolding, except it's potentially just a triangular wedge pattern before that breakout. Now here, the target range is still going to be our upper trend line. Okay, now I would also look at this as something that's just yet to play out with another lower low still here, and that would actually give us more ground to think of our resistance actually holding up here. Because what generally happens is we mirror the rally in to the continuation pattern to the outside. So a break to the upside towards our trend line is something that is likely to occur, in my opinion. Now, that's targeting out approximately $54,000 USD, and again, is something that I've been talking about for about a week now. So we've kind of seen ourselves break this mid-level trend line here, okay, this little ascending wedge that we saw. Okay, we had this one off of the chart. We only had this one here for a second, and we could see that we were looking at testing, breakout, right? And it was this breakout that then allowed us to look at the bigger picture by zooming out at the larger ascending wedge. So our higher range here is still, of course, going to be $54,000, and that's going to be the main area that we're going to be targeting here for Bitcoin, right? We're looking for $54,000 to test that upper trend line. Now, The trend line in itself has a couple of touch points, but by no stretch of the imagination is it perfectly drawn. We may adjust this, and this may be the third touch point on our trend line. And again, I've taken it from the 6th of December, then one touch point, and then on the 11th of January, we have another touch point. So, we are going to be a complete breakout where we completely dwarf this trend line by manipulating it out, right? And it comes out significantly further. Maybe it becomes more of a parallel channel and all of those kind of things. Now, the other thing that's kind of cropped up in the comment sections of the YouTube videos, so do let me know your thoughts and opinions in below. I do read them. Is that, people asking, is this not a bull flag rather than an ascending wedge? No, bull flags don't tilt upwards. Okay, so let me just come over here for a second, right? What you generally find is when you have a bull flag has to either tilt down or at best kind of go sideways, but they tilt down, right? And ultimately they then break upwards, right? That's kind of why it's a bull flag. So let me show you why you don't have it the other way around, because a lot of people will tell you that it can, but they can't ultimately, right? You push upwards and they're saying, oh, well, you just go and do that and then you break upwards again. That there is not a bull flag. It could be something totally different, but it's not going to be a bull flag. Okay, so a bull flag, just for reference, you have a push up, you move back, lower lows, lower highs, and then break upwards. Okay, and likewise when you have a bear flag, right? Bear flags don't just tilt down like that, right? And then you continue going down. That doesn't happen either. You go down, you go up to higher highs, higher lows, then you go down again. Okay, so knowing the differences is quite important. So this is an ascending wedge, but we could potentially change this into a parallel channel, and that would be different. That'd be a different pattern altogether. But this is not a bull flag. A bull flag, as I illustrated right in here, where we have these kind of lower lows, and potential triangle wedge can be, but I expect we've still got a little bit more to the downside to go before we rally. That there would be more of a constitution of or constituting a bullish flag. Now, as I was kind of saying there, you can actually see the example of what is not a bull flag right inside here, right? We rally upwards and then we tilt right here with higher highs and higher lows. Okay, not a bull flag, and instead you broke on down from it, right? So you can see here how that plays out as well, just on a much smaller scale. So on our 4-hour time frame, things are looking pretty good, right? So what about those larger time frames? Let's take this up into the daily. Okay, so the daily time frame has kind of just pushed up above my expectation, right? So for the last couple of months, I've been saying, there's a resistance area on the lead up to the Bitcoin spot ETFs around 48 to 52,000. I've personally thought we were going to hold out in this range, but we broke above it. Okay, this is showing us that this previous area of kind of resistance is no longer resistance, right? That resistance was kind of chewed through, and we kind of have to park it. Okay, so we have rallied up higher than the expected range, and we obviously have closed candles inside this range. It's an indication that this is not an area of selling pressure right now. Now, on our daily time frame, I'm going to bring this up here. You can see the RSI. The RSI is a relative strength index. It basically shows you the momentum of the price action. And here we can see that we're up above this blue area, right? This blue area is basically your area of normal. Okay, if you're above this area, you are overbought, meaning that you are reaching the level of exhausted on buying pressure. And when you're down lower than this blue area, you are oversold. You're exhausting the selling pressure. Okay, so the fact that we are up in this higher range is an area where buyers just really are not as active. And you can start to see that momentum has started to shift down on the daily time frame, slowing down. Okay, that's showing us that things are likely to start cooling off. Now, don't get ourselves tricked here, because the RSI is not a representation of price. Okay, it's just a representation of the strength of the price movement. Okay, so if we start to really correct down here on the RSI, it's going to be an indication that there's going to be a move in price to the downside, but it isn't going to be telling us that we're going down to 20K, 30K, 15K, 2K Bitcoin for all I know, right? It doesn't give you price predictions. What it does do is if we start to see a correction in price and we have a fast moving RSI, it shows weakness with selling, and that would basically constitute an idea that we are not going to see a significant price drop. However, if you have a fast price drop and you're rapidly decreasing in price and the RSI is moving slowly, that shows us the idea that actually there's a lot of selling pressure and the move to the downside is going to be sustained over a larger period of time. So the RSI is an indication that yes, price is likely to reverse because we're overbought. This happens time and time again. Okay, you can just go and back test this if you want. But for the most part, the speed in which this corrects is going to be the indication as to whether you're going to see a sustained correction or just a quick drop and then another rally to the upside. Okay, so where we are right now is heavily overbought in comparison to where it was previously. Okay, so we want to be aware that there is going to be a shift in price soon. Now, if we go ahead and bring up our stochastic RSI, okay, you can see this is also up in this overbought area and is going to be looking for a move to the downside. The difference between a stochastic RSI and a relative strength index on RSI is the stochastic is more sensitive to price movement, which means it will move 2 or 3 times between overbought and oversold in relation to the RSI. Okay, the RSI is slower moving, the stochastic RSI is faster moving. It gives you more of an idea as what is happening faster with a stochastic than it will do with an RSI. But the RSI is great for trends, with stochastic RSI is great for markets without a trend or just markets that are trading sideways, those kind of things. And being overbought on the daily time frame is going to be looking for a shift in momentum, move to the downside. Last time we saw this shift, we actually were only barely up in the overbought area. So last time we were up here was on the 10th of January. You know what happened there, down towards the lows that we actually saw on the 23rd of January, right? We saw this correction from our overbought to our oversold. Okay, it was 21%. Again, we moved very rapidly down to this oversold area on the stochastic, but much slower on the RSI. Okay, we actually stayed down in this oversold area as we continue to go down. The RSI, a stochastic RSI, sorry, here, as we are up in the overbought area, has been up in the overbought area since the 29th of January. We are kind of playing with fire because it's been up there for a while at this point in time, and they don't stay up there all that long. And when they do eventually come down quite hard. So we'll be keeping an eye on that as to whether or not the next big push to the upside is all that is remaining before we actually start to see a bit of a pullback. Volume-wise, we can see volume here on the daily time frame is decreasing as price has moved on upwards. This is divergence, but divergence against volume, not RSI. So higher highs, yet lower volume, showing us again why that RSI and stochastic RSI is overbought. Essentially, there isn't really a lot of volume keeping the price up where it is, outside, of course, of the Bitcoin spot ETF. I'm going to leave the video right there though, guys, but why don't you check out this video right here where JB goes through some really interesting pieces of data.